A $10,000 investment turned into over $121,000 in a relatively short amount of time. But on top of that, doubling the total return ending investment value of that of the S&P 500. Ticker symbol VGT, or the Vanguard Information Technology ETF, has been one of the fastest growing ETFs in the entire market over multiple timeframes. Now, even though this ETF gets criticized for being a little bit underdiversified, owning a majority of Apple and Microsoft, in my opinion, for a long-term investor that wants exposures to some of the fastest growing companies in the world, this ETF offers exactly that. Now, in this video, we're going to break down VGT, explain exactly what it is, how it works, and if or if not, I think VGT is offering a buying opportunity as of right now. Now, if you consider yourself a growth investor that wants to learn about one of the fastest growing ETFs across the entire market, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So right here on the Vanguard website, it says VGT. And one of the first things that instantly sticks out to me is the 0.10% expense ratio. Now, although this expense ratio is a little bit higher than something of that like VOO or SCHD, of course, at 0.06, 0.10% is definitely worth what it offers when you see this ETF's performance. Now, the product summary for VGT, it says, seeks to track the performance of a benchmark index that measures the investment return of stocks in the information technology sector. It also says passively manage using a full replication strategy when possible and a sampling strategy if regulatory constraints dictate. It lastly says includes stocks of companies that serve electronics and computer industries or that manufacture products based on the latest applied science. Now, VGT has been around since 2004 and has almost 70 billion in assets under management. So now that we went over what VGT is, how it works, looking into this ETF's performance, the ETF is up around 950% as far as price return goes. And once again, that's since 2004. Now, later on in the video, I'm going to show you exactly how much an investor would have been left with if they would have invested a relatively small amount of money back then. And stay tuned because you're going to be shocked. But even on the last year time frame, we're talking almost 44% return, which is obviously beating the overall market. And that's of course because some of the top holdings like Microsoft just recently hit a brand new all-time high, which VGT holds around 20% of Microsoft in the ETF. Now, if you look at the breakdown for holdings, this ETF is technology, which means it's going to have a high beta, which of course in turn means that in this sector, when the market rips, this ETF is going to move. But of course, when the opposite happens, hold on tight. Now, this ETF, like I said towards the intro, does get criticized sometimes for having sort of a less than diversified basket of holdings. Although, of course, if we're looking at the performance of this ETF, I don't think anyone's really complaining. But even though there's around 300 different holdings within VGT, investors are getting a small piece out of a lot of different companies. Of this overall ETF is simply made up of Apple and Microsoft. The top 10 holdings altogether being things like Apple, Microsoft, Nvidia, Broadcom, Adobe, Salesforce, Advanced Micro Devices, we have Accenture, Intel, Cisco, and others. Now, the reality is that the fact that this ETF does hold so much Apple and Microsoft, when Apple and Microsoft do really well, which of course they have been as of recently, Apple and Microsoft are both basically trading at all-time highs currently. During times where, say, Apple and Microsoft might dip substantially, this ETF is definitely going to feel that in the price. Now, even though VGT is more or less a growth ETF, which has grown substantially over time, VGT does also pay a dividend. It's around more or less 0.5% over the trailing 12 months, but the dividend growth rate for VGT has been pretty decent. VGT does pay a dividend quarterly as of right now, and the dividend has been slowly inching up at least over the last few years. Now, lastly, I thought it'd be fun to stack VGT up next to the S&P 500 or the SPY ETF and see which ETF has returned what over the past, say, 20 or so years with a $10,000 starting investment. So keep in mind, this is with dividends reinvested along the way, which are not all that much, of course, because neither VGT or SPY offered that large of a dividend. But either way, with a $10,000 investment into VGT back in 2004, the total return over the last 20 years would be 1,124%, or an average annual total return of 13.34%, which of course is extremely impressive, and the $10,000 investment would now be worth around $122,000, and that's just over a 20-year time frame. There's some companies within VGT, for example, as well as of course in SPY, where if you just invested a relatively small amount of money back, say 10-20 years ago, you would be so filthy rich just off that small initial investment. But now looking at SPY over the last 20 years, a $10,000 investment with dividends reinvested would have returned a total of 520%, or an average annual total return of 9.56%. 10%. Now, as a long-term investor, I would be very happy with either 9% or 13%, etc. And of course, I'm not saying that either SPY or VGT are bad investments, but just to show you the power of the companies that are within VGT and how they've performed over the past, say, 20 years. The SPY ETF would have turned the 10K into around 62,000, which again is still impressive, but not even close to that $122,000 an investor would have had after just a $10,000 investment into VGT. Now, lastly, do I think that VGT is a good buying opportunity as of right now for a long-term investor? Well, let's first state the obvious. VGT was trading at around $300 per share not even that long ago. We're talking back September of 2022. So most obviously, if an investor is able to grab some VGT during dips where technology-based stocks are selling off like crazy because of whatever reason, that's obviously a much better buying opportunity. But for an investor that believes in technology long-term and that thinks these holdings, at least for the most part, are going to continue to get more and more expensive over time, I mean, even talking the first three holdings, Apple, Microsoft, Nvidia, even if you think these three companies are going to be around and continue to make profits for their shareholders long-term, well, in that case, the Vanguard Information Technology Index Fund could still be a great buying opportunity if you do have a long time frame ahead of you. But when it comes to this monster growth ETF, I want to hear from you guys down below now. Do you currently own any VGT in your portfolio as of right now? Or if not, what's your favorite growth ETF that you hold as of current? If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.